Good morning, everybody. The November 3rd, 2015 School Land Board meeting will come to order. First item on the agenda is number 1, as stated, approval of the minutes from the October 6, 2015 School Land Board meeting. After you've had a chance to review and assuming no objections, comments, or questions,
Move to approve.
I'll go ahead and second. Motion is made, seconded, and carried unanimously to approve the minutes. Next item on the agenda is the approval of the consent agenda as posted. Assuming no questions, comments, or objections, can ask for a motion and a second.
A motion.
Second.
The motion is made, seconded, and carried unanimously to approve the consent agenda as posted. Before we start item number 3, I wanted to welcome Tony Kerp, VP of Development with Aspen Heights. We appreciate you coming in this morning. We look forward to learning more about our potential transaction. Next up on the agenda is number 3 as stated, consideration and action on tracks, terms, and conditions for the January 5, 2016 oil, gas, and other minerals lease sale.
Good morning. I'm Mary Beth Barnstone with Mineral Leasing. Mineral Leasing staff requests School Land Board approval of the tracts to be offered at the January 5th, 2016 lease sale, along with terms and conditions for said tracts. Energynet.com, will perform the lease sale online. Staff requests School Land Board approval of 90 tracts for the sale. These tracts cover approximately 24,000 acres, which is about the same number of acres nominated for the last lease sale. Bidding will be on a bonus basis with minimums ranging from $100 an acre to $2,500 an acre, depending on location and geology. Royalty rate will be a fifth to a quarter, either fixed or variable, depending on location and geology. Primary term will be 3 years for river tracks and upland tracks. For submerged tracks, the primary term will be 5 years. Rental rates will be $10 an acre for years 2 and 3, $25 per acre for years 4 and 5 for submerged lands. Middle Coast, you can see the areas in yellow. Upper Coast, again, those are the nominations. And Lower Coast, there are just a few tracks in the northern portion. These are shown in yellow. Any questions?
What's the state's royalty interest in this, on these tracts?
The royalty rate is a fixed quarter for uplands tracts and river tracts. For Bay and Gulf, it's variable. So for the Bay and Gulf, if production is established within the first 24 months, it's a fifth. If production is established between 24 and 48 months, it's 22.5%. And after 48 months, it's going to be a quarter.
So most of these potential tracts are submerged?
Yes, the ratio, if you're looking at last sale, we have about the same number of acres, but more submerged tracts have been nominated. So I'm not sure if we can expect the same revenue rate. Probably not. The submerged tracts are offered at $100 an acre. The Reeves County tracts are much higher at about $2,500.
Given the state of the industry, do you think you'll have a lot of interest?
I think so.
Any other questions at this time?
No, so moved.
Okay, thank you.
Second.
Motion is made, seconded, and carried unanimously to approve item number 3. Next item on the agenda is number 4.
Good morning. David Wells with Asset Management, and docket item 4A is LC 940049, Marina del Sol Holding, LC, Clear Lake, Galveston County. This item is a renewal to a commercial easement on coastal public lands comprised of approximately 4.48 acres of encumbrance. It's a marina comprised of piers, walkways, open encumbered area, dredge, and fill. The previous contract had a 20-year term with rental adjustments every 5 years, ending at a rate of $2,794.36 per month. In an effort to maintain the current rental rate as well as include the standard commercial escalation, staff has come to an agreement with the lessee on a rental schedule moving forward. The rental rate will remain the same with a 20% escalation for the last 5 years of the term. This results in a blended average for the rental term of $3,027.22 per month. The total consideration for the contract term is $435,919.68. Staff recommends approval of docket item 4A as posted.
Is there a motion and a second?
So moved.
A second.
Motion is made, seconded, and carried unanimously to approve item number 4. Items number 5 through 8 will be in executive session. The School Land Board will enter session pursuant to executive session pursuant to Chapter 551, Subchapter D, Section 551, Tech 071 of the Texas Government Code for discussion and consideration regarding pending or contemplated litigation and/or settlement offers, or to seek or receive attorney advice or counsel related to items 5 through 8 on the docket, and subsection 551, Tech 072 for the discussion and consideration concerning the purchase, sale, exchange, lease, or value of real property related to items 5 through 8 on the docket. Following executive session, the board will reconvene in open session to complete the docket. The open session of the November 3, 2015 School Land Board meeting will resume with item number 5.
Good morning. Amber Long, Asset Management Division. Staff recommends approval of the disposition of tax foreclosure land per the terms discussed in closed session as being in the best interest of the state. Any questions?
Is there a motion or a second? And a second?
So moved.
Second.
Motion is made, seconded, and carried unanimously to approve item number 5. Next item on the agenda is number 6.
Amber Long, Asset Management. Staff recommends approval of the sale of permanent school fund land per the terms discussed in closed session as being in the best interest of the PSF. Any questions?
None at this time.
Thank you.
Is there a motion and a second?
A motion.
Second.
Motion is made, seconded, and carried unanimously to approve item number 6. Thank you, Amber. Next item on the agenda is number 7.
Russell May with Asset Management. Staff is recommending the approval of a lease for the subject property under the attached terms and exhibits as presented to the board in closed session for the benefit of the Permanent School Fund. Are there any questions?
So moved.
Second.
Motion is made, seconded, and carried unanimously to approve item number 7. Next item on the agenda is number 8.
Thank you, Mr. Chairman, members. For the record, I'm Rusty Martin, Chief Investment Officer. With regard to agenda item number 8, I move approval in accordance with the terms and conditions that were described to the board in executive session. I'm happy to answer any questions.
So moved.
Second.
Motion is made, seconded, and carried unanimously to approve item number 8. Finally, next item on the agenda is number 9, as stated.
Thank you, Mr. Chairman, members. This is a non-voting item. I'm pleased to present you with a quarterly investment report for the TexGlow Permanent School Fund Real Assets Investment Portfolio for the period April 1 through June 30, 2015. As you know, the performance measurement calculations and statistical data that's presented in the report were prepared by State Street Bank and its Private Edge Group, which are the custodial accounting and performance measurement agents for the portfolio. Just briefly on economic conditions during the period, second quarter U.S. GDP increased at an annual rate of 3.9%. Unemployment rate fell to 5.3% from 5.5% during the quarter. Fed policy remained unchanged during the quarter. They left the Fed funds rate at 0 to 0.25%, but signaled that an increase is approaching when it sees further improvement in the labor market and is reasonably confident that inflation will move back to its 2% objective. They also iterated that they would take a balanced approach when they finally begin to remove their policy accommodation, and I expect that would be the case. In real estate markets, the NCREIF Property Index, NPI, which is a benchmark for the overall market, posted positive returns for the 22nd consecutive quarter. Fundamentals across all property types continue to benefit from continued strong job growth. Through July, total employment had increased for 58 consecutive months. That's the longest continuous employment expansion since record-keeping began in 1939. Pretty impressive. Most of the main property types continue to reflect falling vacancy rates and rising rent growth. For example, office vacancies were at their lowest level since mid-2008 at 13.5%. That's down 100 basis points from 2014. The commercial real estate market as measured by NPI returned 3.41% for the quarter, and its trailing one-year return was 12.96%. All of the quarterly individual sector returns were positive for the 21st time since the second quarter of 2008. Industrial was the best performing sector in the quarter, followed by hotel, retail, and apartment brought up the rear. The returns for each sector during the quarter were hotel 3.54%, retail 2.98%, apartment 2.98%, industrial 3.78%, and office 3.11%. In the energy markets, the WTI oil prices ended up approximately 19.9% for the quarter at $58.34 a barrel. Those prices reflected the fact that OPEC, led by Saudi Arabia, remains focused on preserving market share, and that's contributed to the continued downward pressure on prices during the period. Also, there was a continued increase in U.S. shale oil production, even though there was a significant reduction in rig count, because there was a backlog of completed wells that came online, and there also were continued drilling efficiencies. However, over the coming months, a declining rig count and significantly lower drilling budgets should push U.S. production levels down closer to natural well decline rates, which should help oil prices go higher in the near to medium term. Also, during the period, gas prices decreased. They ended with an average quarterly price of $2.75 per million BTUs. That was the lowest since the second quarter of 2012, and it was down about 5% quarter over quarter. The decrease in gas prices was primarily caused by production growth continuing to exceed current demand. No surprise there. While oversupplies is still a short-term concern in the medium to long-run time frame, there are still some things that are positive for gas, such as coal to gas switching remains strong. Industrial consumption is increasing. LNG exports should begin to come online. And there are some infrastructure builds out, certainly in parts of the country like the Appalachian Basin, that should come online that would all have positive impacts on gas pricing. Therefore, most market participants believe these factors will cause supply and demand to begin to converge and cause medium to long-term gas prices to fall within a range of $3.50 to $4 a million BTU. Turning to the performance itself, if you'll look at page 2 in the report, I'll go through some basic information here. The total net asset value of the portfolio at June 30 was $4.522 billion. That was comprised of $1.884 billion in the external portion of the portfolio, which is about 95% of the portfolio. Internal portion, $254 million, and the cash waiting to be called is $2.384 billion. In the current quarter, the external portfolio, if you look at the top section there, 3.73% versus 2.98% on the benchmark. All three sectors of the external portfolio were up during the quarter. Real estate was up 4.65%, infrastructure was up 2.95%, and energy was up 1.93%. If you look at the 1, 3, and 5-year returns on the portfolio as measured against the benchmark at the bottom, you'll see that the 1-year return was 11.36 versus 8.99 on the benchmark. It's an outperformance of 237 basis points. 3-year return was 14.59%. That's the average versus 9.96 on the benchmark, so outperformance by the portfolio of 463 basis points. And then the 5-year return averaged 17.93% versus 11.94 on the benchmark, outperformance by the portfolio of just under 600 basis points. At June 30, about 46% of our total capital commitments remained unfunded. That represented 30% of real estate commitments, 54% of infrastructure, and 65% of energy. That is to be expected as the energy portion of the portfolio has gone through a build-out phase over the past year and a half. On the internal portfolio, just under the external section, you'll see that its return was 1.49% versus 2.98 on the benchmark, and its one-year return was 10.92% versus 8.99. The internal portfolio has now experienced 18 consecutive quarters of positive returns. Looking down at the combined portfolio performance without cash, so it's at the bottom of the top part of the chart there. You'll see the current quarter return was 3.45 versus 298 on the benchmark, so an outperformance by 47 basis points. Looking at the one-year return, it was 11.32 versus 8.99 on the benchmark, outperformance by 233 basis points, and the five-year return, 15.38% versus 11.94 on the benchmark, outperformance by 344 basis points. On an invested basis, the combined portfolio is generally still over-allocated to real estate. It's at 60% versus a target of 33%, but that is expected given the changes that we've adopted over the past few years. And that will continue to change over time as more of the commitments to infrastructure and energy are actually funded. For example, at June 30, the end of this period, the real estate allocation, if you look at it on an invested plus unfunded commitment base, it was only 43% of the portfolio. From a geographic diversification perspective, the combined portfolio is very close to the targeted allocation for each region. Currently, the allocation to the U.S. is about 79% compared to a target of 75%. The allocation to Texas is about 14% of the portfolio versus a target of 15%. And the international allocation is now around 8% compared to a target of 10%. That concludes my report. I'm happy to answer any questions you might have. This is a non-voting item.
No questions at this time. Thank you, Rusty.
Thank you.
There being no further business before the School Land Board, this meeting is hereby adjourned.